Good evening, everyone. Good evening, and big warm welcome from me, Adam Harris. I am speaking to you tonight from London. So I was away for a week. I've come back. First thing I want to do, please, if you know me, I'm going to be just checking that the sound is clear. You should have good, clear sound. There we go. Diana, thank you very much. Good to have you with me again. Sound is good. Excellent. That's what I like to hear. Hi, Leon. Excellent. So I've got some regulars. I like that very much. And again, thank you very much for joining me. Tonight's topic, ladies and gentlemen, is we're going to have a look at the bigger picture for Forex markets. The title is Zooming Out on the Forex Markets. How did we get here? As I said, I've been on holiday. I literally just arrived back today, so I'm sort of picking up the pieces. So we're going to have a nice look at the markets and see what's going on. So there's a risk disclaimer. There's always one. I have to give you an opportunity to read that. And while you're doing that, for those of you who don't know me, I will tell you something about me. I'm based in the city of London. I used to do more swing trading than day trading. The last couple of years, last 2-3 years, I've been switching over to day trading just because I've been at home more, and I trade everything. So commodities, currencies, indices. My focus tends to be on what is trending. So for example, over the last year, obviously some of the majors have been trending very well. The indices have been more bearish. Commodities have been mixed, some of them bearish. And some of the currencies, the dollar yen pairs, for example, have been trending really well. Some of the euro pairs as well. So on our agenda, we're going to talk about the Forex market analysis on longer time frames. So here's the thing. I mean, if anyone is curious, I am usually, for my day trading, I am usually looking, for the most part, at my 4-hour chart. So I'll take you through it. I'll take you through kind of the process here. I'll present it to you, make my case to you. So I'm usually looking at the 4-hour for direction, and then I'm usually looking for an entry on the 15 minute. I can trade the 1 minute. Yes, sometimes I might set up on the 4-hour or the daily or the 1 hour, because those take a lot longer to form, and I might just see one of those. But for the most part, if I'm looking to day trade, I want to see if I can get some movement into the markets. It's usually the 15 minutes, and the 4-hour gives me my direction. So the reason I'm telling you that is because I want you to also become aware of how the monthly can be valuable to us. So even if I'm taking a trade on the 15 minutes, it can always help me to see what's the daily doing, what is the weekly doing, and what's the monthly doing, to give me some perspective, some approach. It's always about perspective. I watched, so yes, tragically, I was away the entire time since Queen Elizabeth passed away, and we arrived literally back today. So we've been watching it on every single channel, and I think if we had been here, my fiance and I would have definitely have made the effort to go in and see. Everyone we've spoken to just said it was really busy. Obviously, so many people, and yeah, it was a really big thing. We haven't really had anything like that in the UK, and may not have anything like that again for 30 years or something. So it's quite a big deal. And what makes the UK very special is that we have both that kind of history and that pride that comes with royalty, and also at the same time it's a democracy. So it's a really unique thing around the world that we have something that literally the last empire is also the leading kind of democracy. Not so much the US right now. Anyway, so we're going to have a look at key trends and patterns of euro, dollar, dollar yen, pound dollar, dollar Swissy, how to apply these insights to your daily trades. What I would like for you, ladies and gentlemen, to get out of this hour is hopefully a clearer sense of maybe a way to scan the markets, maybe a way to determine if a chart is wasting your time, and ideally maybe which charts have got better opportunities. So that's kind of really my goal. So one of the things I want to do here is, while I was away, on YouTube I do these weekly analysis videos, right? And so not this week that's just been, or is it the week that's just been? Yes, it is. Sorry, the week that has just been. I was talking here, I'm going to go down to the daily, and the market was looking really nice and bullish. So I just want to show you this. The market was looking really nice and bullish. US CPI numbers came out. So here's another thing I want to kind of tell all the people who've been trading for less than 2 years. Most of the time, there's something that the markets are worried about. Something. There's always something. So there's if I go back to the year when I was first getting, the first couple of years I was learning how to trade, it was Greece going to default? So there were worries about different countries, Spain and Greece, defaulting, and there was fears of a trade war. So this is 2010, 2011. There is always something the markets are obsessing about. However, excuse me. However, I want you to understand this. Please remember this, trust me on this to a degree. It's rare that there is this amazing correlation between what the market is worried about and the actual market moves. This is really important. Over the last 2 years, we've had a very strong dollar. We've got dollar yen doing its thing. And especially this year with the fears of inflation, the war breaking out, all these different things, we've actually had a very strong correlation between what we're hearing in the news and what we're seeing in the markets. So the markets are scared, and so we're seeing a correction in the markets, but it isn't always the case. You can go through an entire year where there's stuff in the news, but the market isn't correlated to it at all. What I mean by that is that when you expect the markets, we've got inflation, there's a concern, we could see the market responding to that, and it makes sense. But this is a trap for traders who are learning in the last 2 years. You're always going to expect the market to tie up with what you hear in the news, and actually most of the time it doesn't. The only time when it really does do that is when there's a big thing going on, like when there's a correction or a market crash. That's when there's a very strong correlation between what we're hearing in the news and what we're seeing in the markets do. But for the rest of the time, we can be hearing, if we go and have a look just very quickly, if we go have a look at the the NASDAQ or one of these, S&P, we look at it from a weekly perspective. No, monthly will do fine. Up this entire area up here, people in this whole area here didn't believe that we would recover from COVID. Then we broke through that, we carried on going, and for every bar that's here, there was always bad news. So the market shouldn't be going up, shouldn't be going up, it just kept going up. And people's accounts get destroyed because they think the market's going to come down. And historically, it makes way more sense to historically, it's very dangerous to short the market. It's much safer to go with the market, because over a long period of time, the market will tend to go up more than down. Anyway, so to come back to what I said last week, I was relatively optimistic. The markets were overextended. We had some bullish divergence here. So for the newbies, again, let me just explain. This is a very powerful, very reliable way of looking at the market. So we're going to do this with the major currencies. What I would like you to note, please, is that we have like a low. Here's a low. And then we have another low where the market came down here, came back up, and then we have another low here. But unlike previous lows, these are not very big moves further down. So here it breaches the low here, then comes back up immediately, then goes down, and then comes back up immediately. And so that kind of behavior, when the market is slowing down, so in other words, when it's going fast, it just keeps doing this. When it starts slowing down, it starts doing this. Does that make sense? And so when it starts doing that, your indicators, and the only reason we have the MACD and RSI, we're just double checking. So we have two indicators just to make sure we got the information. What happens in this situation is that if your market is heavily bearish, your indicator will generally trend lower. It'll have a downtrend. So here, for example, it's trending down. It's got lower highs, lower lows. And then sometimes it gets a bit overextended. It goes through a bit of a consolidation period, which is this. So it kind of does a little bit of that stuff here. And then this is where it gets really weird, is as it's producing these lows, it starts going higher. So it's not just the MACD that goes higher, it is also the RSI that's going higher. So what this is telling me actually is that the market is slowing down. And that's true. If you count all the candles in here, it's probably the same number of candles as you have like there. So the market is the indicator has detected that the market is not going as fast now as it was before. And so it starts to fall behind. And actually what that means is, although the market's creating fresh lows, the indicator isn't creating fresh lows. It starts heading higher. And so we just kind of look at it. We can, after a while, you can start to see it. You start to recognize the price action. You start to see there's a low that you start to see the price action do this. You start to see it sort of do this. You start to notice that it's not really climbing anymore. That comes with time and practice and experience. But in the meantime, we use these indicators because they can often be very reliable. And so they can give us a clue that the market is slowing down. And that means that the market could be consolidating. So this is really important that we know this. It could be consolidating, or it could be getting ready to change trend. So it could consolidate and then just carry on down. It can do that. Or if the market is going to change, we could see a change in direction. So we don't become buyers at this point. But what we might not want to do anymore is become sellers until the market basically breaks above this high. So we kind of look, here was a big high, there was a big low, here's a big high, there's a big low, here is the last big high since we had this low. And the market has created a fresh low, but it hasn't broken this high. So it's only when the market currently breaks this high that we could arguably say, okay, the euro dollar like longer term trend is not hitting lower. By finger painting, I'm like a kid in a class. So this is where we're currently in a downtrend, but if we break up above here and we really break up above it, then we would expect to see a change of trend. And we're not there yet, but we are seeing the market sort of slow down. So it makes it very dangerous for newer traders. In fact, it makes it dangerous for all traders because the market doesn't really know what it wants to do. We've got about 10 or 20, almost 3 weeks worth of market activity that went largely sideways during that period. And again, here, almost a week of sideways activity. Here, almost a week of sideways activity. And here was beautiful. We had this move down. We were bullish here. The market broke that high. It looked really good. And then the CPI numbers came out and the market got kicked down. And now it just doesn't know what to do. So when I look at the bigger picture, we've been trending for a while. I believe the markets are, that the euro dollar would like to, I think it would like to do a higher correction. So here's the thing. Here's another bit of why the higher time frame is very powerful. Most of our winning trades come when we trade on the lower time frame, when we trade in the same direction. So in other words, if I'm going to trade the 15 minutes, I want to trade ideally in the same direction as the 1 hour and 4 hour. Or to put it another way, I want the 1 hour and the 4 hour to be supporting me in terms of that direction. That doesn't mean all my trades will be winners, but it does mean that I will have way more winning trades and way more losing trades because I'm going with the prevailing trend. And that's a really hard thing to do. So why am I telling you this? Oh yes, because if you're looking on any time frame, so here's a drawing. So you see a trend sort of doing this, okay? Now, it doesn't matter what the time frame is here, but if you zoom in and you go to a lower time frame, so a much lower time frame, and you zoom in here, this is what you will see. You'll see little uptrend, micro trends up here, and a temporary micro trend down. And then it'll go back into an uptrend here, and then back into a downtrend there, and then back into that. So you have these smaller trends within the bigger trend. So you want that awareness of what is going on with the bigger picture, just so that you don't get caught. Nothing more frustrating than you end up buying here, and then it goes into a downtrend. So now you end up selling, and then it goes back into an uptrend, and you don't understand why. And it's because the bigger time frame is doing a correction. So the bigger time frame has its extension, retracement, or push-pull kind of phase. So the reason I'm telling you this is when we have a change in trend here, or we get this divergence, that is usually because the higher time frame is wanting to do a pullback. So for example, if the market's gone up like this and it wants to do a pullback, if you had to, and this was the daily, and you went down to the 30-minute, you would probably see a bit of bearish divergence. Your indicators would be starting to look bearish because the market is starting to slow down because it wants to head a bit lower. Does that make sense? So the whole idea here is that when I see a change in trend on one time frame, my first relatively safe assumption is that the higher time frame is going to do a correction. So if my daily changes trend, that means that generally that my weekly is doing a retracement. So in other words, it's doing this. So with that in mind, let's go look at the weeklies. Okay, so here you can see the weekly. We actually did do a pullback here. Look at the strong trend. And currently this is where price is at the moment. Okay, so there's nothing, I have to say the quality of the trend looks pretty decent. I mean, it's a strong trend. But let's go to the monthly. So here's my issue with the monthly. So in other words, what I'm trying to do here, imagine I'm doing this for me. I'm doing it not just for you guys, I'm doing it for me. We have had a very, very long run. It's rare, very rare to have a long run like that. You might have them, but it happens here. I mean, that was there, that's it. We haven't had one of those in a very long time. Very rare. We've also sort of broken through these lows here. So there's two kind of things that are relatively rare here. Oh, plus, of course, 1 euro dollar equals 1 US dollar parity. Sorry, for some reason I blanked on that. Parity is here as well. So we've got a lot of different things going on. And so I'm just highlighting that the market is sort of starting to act a little bit funny in this area. We're not convinced just yet how it's going to ultimately react. But I would say that it is overdue for a healthy correction. And if we have a healthy correction, how far could we go? Well, the monthly gives us some really major price levels that we could count on. And if you then took Fibonacci, measured it from the high, it doesn't matter, they're so close, we could do it from both. Let's just pretend that the market retraced from where it is here. Just to say that this is where it turned out. You can see here, we've got a 382 up here. So actually the smaller retracement would be here, 382 would be here. We could go all the way up here and still only have a 50% retracement. So that can happen. We could go as far back as a 618. It is possible if we have that monthly retracement. I would say the shallowest move would be up here towards 1.04 in that area. Further up would be towards 1.07. That could happen. And that would have to be a monthly kind of a retracement. So that would be, that's a possibility. That would be something like this. It might not look like it, but it could be quite a big move here. And then you get, you get a move from this low up to this high, that sort of distance, and it does the same thing here. It can happen. So what would I need to see that that's likely to happen? Well, first of all, parity is worthwhile paying attention to, that number of 1, which is somewhere around there. And it's worthwhile paying attention to because the market's overextended. So one of the things that happens when a market is very overextended and it comes to a major level, it is not as strong because it's been running and running and running and running. It's not as strong. So usually in those cases, the market might take a bit of a breather. So it's not impossible. It could keep going. But if the market was going to take a bit of a breather here, what would I expect to see on the lower time frames? Okay, so if I then go to the weekly, what would I expect to see? Well, and it could take a while. This is one of those things that honestly could take a couple of months. I would expect to see if the market is going to turn around. I'd expect to see it starting to diverge a bit. I'd expect to see those starting to head up, and I'd expect it to start breaking above these highs. So we do double bottoms. But some of the most powerful patterns, keeping it simple, by the way, is always the best way to go. Double tops and double bottoms are so powerful. So if you have a downtrend and the price comes back up and then rejects it, that could be a fantastic double. Think of it as a double top within a trend. And again, you can have, when the market's ranging, you can have a double bottom or a double top. Those are very powerful kinds of reactions. Lots of other traders trade them. That's all. We just trade them because other traders trade them. And so it becomes a cumulative thing. So those are the kind of things I would expect to see there. Also, I would start to see more and more bullish candles, like strong green candles that look more and more like this, maybe a couple of rejection candles that look a little bit like that, some big moves up. I'd expect to see some of that stuff happening. Very important would be to break this high here. Very important to break that high because that would be a significant one. And then ultimately what would happen is we would get a green rejection candle here. So if we finished with a green monthly candle here, whether it was October or November or September, then that could be that could then be the end of that move. We could then see the next month start to break the high, and we could see a bit of a retracement here. Okay, that's a possibility. Something like this. We could see a bit of a pattern like that. The problem with that, ladies and gentlemen, so this is why we want to look at the big picture. The problem with this is that during that period, look at what it can do. It becomes untradeable because the market itself is trying to figure out what to do, and it can do that. It can take weeks to do that. So it becomes, this is why we want the big picture, because when the market becomes untradeable like this, we want to know why. And we can. We're like, okay, well, we can guess why. We can say, well, it's at parity. Maybe it's it's overextended and there's some divergence. Maybe it's just trying to do a bit of a monthly pullback. And then that explains it. And then as long as you mark those key levels, you kind of understand what happens. Once it starts to break above those levels, it will start to pick up more momentum because more traders will go, for example, so if we imagine that on the daily, this is our nightmare scenario. This is where we are. Oops, sorry. Like that's our nightmare range at the moment, something like that. And basically, there's lots of buyers sitting up here and there's more sellers sitting down here. So if this breaks up below this range, more sellers will jump in and it will start to behave a little bit better, start to trend a bit more, and then start to move lower. If it breaks out of here, it'll start to trend a little bit higher. Buyers will start stepping in. They've got a bit of a concern here and they've got another concern here, but for the most part, it should start to smooth out. Its behavior should start to move from its current bearish mode to its bullish mode. Right now, it's just very dangerous. Diana, you asked me which time frame. So just explain, sorry, I moved on a bit and I didn't mean to, but if you can just give me a clue as to what you mean on that one. Like, let's assume I trade, oh, you actually are doing it. Sorry, I'm reading the next question. So let's assume I trade the 4 hourly and my entry's on the 1 hour. Cool. So shall I look at the 4 hourly time frame double top or double bottom, right, and go higher? So that's kind of cool because I have a thought here. So imagine, well, I wanted to show you a couple of these, but in a way, this is the daily, and that bounce there and that bounce there together become a double bottom. So you might have a double bottom there, but if you had to zoom in here on the 1 hour, you might see a changing trend. So what's interesting about that is that sometimes you're getting a pattern on top of a pattern. And so that's kind of what you're looking for. You're like, okay, I see that we've got, let's just say it was like this. Let's say we had something, oops, that's not the best example. Let's say we had something like that. And so you'd had those two candles formed and the price was sort of breaking above that. Then you looked at the daily, you went, oh, wow, actually that looks like a double bottom. We've got some green candles. So we break the high, we've formed that swing low, then we might head higher. It's not a guarantee, but that happens quite a bit. Here you can see a bit of a double. That's actually a triple top in a way. There's a couple of other touches here. You don't always see it in the moment, and you would be completely forgiven if in the moment you're like, is it a double bottom, is it a double, and you have to wait, and then you kind of do it. That's okay. But sometimes you'll see on the higher time frame, you might see a double bottom forming on the 4 hour, and maybe on the 30 minutes or 15 minutes, you're seeing it starting to change from a downtrend into an uptrend. So you've got a change of trend on one time frame, which also which makes sense because there also happens to be a double bottom on the higher time frame. So that, in other words, you can have both. You know what's even amazing? Sorry, I'm getting excited now. You could technically have, it's possible that on your higher time frame, you get a double bottom. And sometimes you'll see this, you'll see twin tweezers like that. If you zoom in on that on the lower time frame, believe it or not, ladies and gentlemen, it's a double bottom. So you end up having a double bottom on the 15-minute time frame that is the second double bottom within a double bottom on the daily. And those are all little things. They add to each other. So it's kind of cool. I never really used to appreciate them, but I'm telling you now, they are magic. They really are little simple things. But yeah, you have that. So to come back to where we are, this is the bigger picture of euro dollar right now. And I'm going to kind of add to that. I'm going to add to that analysis as well. Okay. So check this out. So this is also a very powerful habit. It's a thing that you can do, especially in the beginning, is your safest trades would be the weakest currency against the strongest currency, or a weak currency against a strong currency, because the trend is very strong. So for example, over the last, as you know, over the last year and a bit, we have had really Leon, I'm so sorry. I'm back from holiday now. There's no excuse. I should do a video for you guys on adding in those indicators and stuff, right? Let's see here. You see, I haven't forgotten. Let's just go through the objects. I'm going to do this quickly. Okay, so I'm just going to quickly get rid of all these things. It'll delete everything, but then the thing will come back. So the reason I want to show you this, so weekly looks relatively bearish, but it could change trend. It could happen that monthly's overextended. The daily is just a bit of a mess right now. My analysis would ultimately be that if the euro dollar breaks below here and a nice solid breakout candle like that, if you, within that context, is a very nice thing to do. So if we saw that, then it makes sense. It's going to go a little lower. Here's the problem. We are definitely, it is not my imagination, we absolutely have bullish divergence here. So the other thing I want to do here is I prefer something like 8 or 9, and all that does, sorry, is amplify just amplifies the peaks and troughs. So there you can definitely see, I believe you can see the high lows. I think we are starting to go a little bit higher. So we have that bullish divergence. Now it's there. I'm not imagining it. Let's go and have a look at all the euro pairs. So what we're going to do now is we're going to drag and drop each euro pair into the chart, and we're going to look to see if it's looking bullish. So we'll look at the last 10 or 20 candles, and we'll also have a look at any of the indicators here to see if the trend is changing. So let's look at Eurogbp. So Eurogbp, I think it's fair to say, is bullish. It's in a clear uptrend. It's broken these previous heights. So it's certainly more bullish than bearish. Okay? Look at the price action first. Forget about the indicators for now. Don't worry about that. We only go to the indicators if we're looking for any other information. Okay. Euro Aussie is in an uptrend. Also running into a bit of exhaustion here. That's fine. It's at a level. But it's broken these previous highs. So we could currently say it's bullish, right? You can even see here there was some bullish divergence. We had higher lows here when we had lower lows. So again, we had some interesting stuff. On a monthly or weekly, we had a double bottom here. That was on a bigger picture, we had a double bottom that did this, boom. But also even here, we started to see from these lows, bullish divergence. We had a nice little bullish candle here. So the market gives you signals that it's trying to change, but you have to let the market do it. So I just want to show you this. Principle, this is more bullish than bearish currently. As the Euro Kiwi is also bullish, that's not right. I was about to say that's. So it's also coming up to a level, but look at that strong bullish move. Okay, Euros, I'm going to skip here again. I'll explain why in a moment. Euro Swissy is struggling a little bit here. Here we go. So here's some good stuff. So the week before last, I was looking at something like this. So I didn't know what was going to happen after that. but I saw this and I saw that bullish divergence, and we had the same thing here again. And then we saw that big correction. So I was like, okay, fantastic, it's going to happen. And then the CPI numbers came out and the euro got knocked down. But then what did it do? It has absolutely done a double bottom now. So it's also done a bit of a double bottom here, and the bullish divergence is increasing. So what does that mean? It means that this is trying to turn around. Doesn't mean it will succeed, but it is definitely trying to turn around. And so what am I expecting to see now? Well, I really first would like to see that high broken. I'd like to see another rejection here and start to see that broken. And then I would start becoming bullish. I'd start looking for buys on that, because that is desperately trying to turn around. It really is. It's also overextended, by the way, if we go through to this. It's also overextended to the downside at 9,600. It's never been at this point before in its life. So it's trying to figure out what it wants to do, so to speak. And I'm just explaining that we've got a double bottom here. But the double bottom with the bullish divergence implies it desperately wants to change direction, but then we have to wait to see it do that. So that's your Swissy, EuroCAD. So EuroCAD has also, there we go, has also broken above these highs and started to go higher. So here's a good example of what I would expect the euro to do. We've got these lower lows, we've got the divergence heading up, we've got the same thing here, you can see it's trending up, and we've broken above that level. So we've in an uptrend, we've broken through the level. This becomes a buy now. So there's at least up to that level, if not up to there. There are some good buy opportunities here. Okay. We've broken through the level, we should be good. We're not too overextended. We're not, we should be okay. So EuroCAD, we could go down. So let's recap what we've worked out so far. All the euro pairs are bullish. We'll go back and do euro yen quickly as well. So euro yen is still bullish, but it's also got its own thing going on here at a level. Okay, but it's still been trending up recently. So we can see if every single euro pair has been trending up recently, as opposed to before, by the way, when it was weaker. So when you go to these parts, euro was trending down, you go to EuroCAD, euro was trending down. It's not trending down anymore on the other pairs. It's starting to show some bullishness. So what do? So first of all, I need to mark these levels. These are the levels I want to pay attention to, because this is where the market's going to move from one level to another. Oh dear. Okay, excuse me for 1 second. I'll explain why. I'll explain why. Listen, my dogs might want to come and see me. They haven't seen me for 10 days, and if you hear them screaming at the door, they want to come in. And they've just arrived. I was hoping they'd arrive after the webinar, and they haven't seen me in 10 days. And I have the best dogs ever. But if they smell me and they know I'm in the office, they might want to try and come up. Let's see. Okay, so we got these levels here. So the market basically just works its way from one level to another. So I'm kind of placing that there where I feel like it connects the most things as well. We've broken through that. I'm going to add a little other level here because I feel like that was a significant. We've just kind of broken through that. When it comes to putting horizontal levels, support and resistance, remember that the reason you are doing it is to make the information more organized for you. I'm giving you a big tip here. You are putting lines on the chart where it helps you. In other words, don't stress too much about, oh no, what if my line is kind of here, not here, like what's the precise place? Over time, that will kind of settle in, and believe me, master traders still are a bit funny about where they do it. But what is important is that you do it to organize the information for you. So I definitely wanted to put one there, but I also will grant you that I'll put one here as well. So I put two. I wouldn't always do that, but I would do that here. So for example, here I put it here because I feel like, yes, there's another little bit of a level there, which isn't always the case, but I want that there. So just do it for yourself. You can always tweak it later, but your goal is to largely bracket price. And that's it. And you only have to go 2 or 3 above and 2 or 3 below. You do not have to go for every single level because, you know, it's going to take us a while to do that. And if you're doing a weekly analysis, you can come back to it. You can add another level in. It's going to be rare that it's going to go more through all that. It'll happen sometimes, but it's rare that it's going to do that. So you just 1 or 2 levels above and 1 or 2 levels below. So here's the thing. We've now determined, for example, EuroCAD can sit on our watch list. It's relatively bearish. We've got a little bit of a move up to here. If we can break through this level, we've got some potential to move up to here. So if we go down to the 4-hour, we know what the trend is. We know the trend is bullish on the daily. Our only concern now is really, is it overextended or is it, you know, going to run out of steam? But for the moment, it looks relatively bullish. If I go down a little bit further, again, we've got similar patterns here. So don't forget, we've got little patterns within little patterns. We've got support resistance levels here. So it's the time of day that throws me off here. But otherwise, I would put an entry level above this green candle and stop loss here because we've broken through this. We've come back to retest it. There's my bullish candle. And I would target 3 to 1. Straightforward. I take some profit at 1 to 1 so that I can get my trade to break even. And then I would target that. And that would be my approach. But because we're sort of late at night, the markets might go to sleep after the US session and then pick up again tomorrow morning. And sometimes when they do that, they sort of creep back again, and then you'll see them tomorrow morning taking off. But this is kind of my plan. So you can sort of see my initial plan over the next couple of days is moves up to there. And if it can break through there successfully, there's actually a bit of room for it to move up to there. So you can see even down to that 15 minutes. What would I like to see here? Well, tomorrow morning, what I would like to see is a shift to an uptrend. That's what I'm looking for. And if it does this, if it goes down, then something has changed. And the thing about trading is we get an idea from experience as well what the market is most likely to do. So when it doesn't do that, then that stops us from trading it. Something's gone, something has shifted. It's kind of like the best way conceptually to think of trading is imagine you're going to go surfing waves on the ocean. So you're surfing waves. Now, each wave is different, but waves are wave-like in terms of their behavior. You need to be able to swim, so there's a safety aspect there. You've got to wait for a set. You've got to see which way the waves are going, and you have to be realistic. Yes, you could get dumped by the waves. Hopefully you don't. And also you can't expect the wave to take you all the way home. You know the waves will only move for a certain period of time, and then they'll sort of die, and then you've got to paddle out again. And also you can't surf waves all day long. You'll get so tired, eventually you will make a mistake and you will hurt yourself. So that kind of thinking of it as in that sense is very healthy for us to think about it. And also remember, you don't necessarily need to know the physics behind waves and the physics behind the moon and so on and so forth to be able to surf successfully. You need to be able to swim, get up on the board, and you've got to be able to navigate the wave in real time as it's unfolding. And understand that waves can sometimes do something random. They could just die. Or, this one could go further than the last one. There's a whole lot of other stuff behind it. But the point is that waves are very similar in their behavior. So the same thing again here. And if a wave you got on started acting funny, you would just get off it. Like if you were nervous or if you were experienced, you'd just be like, something's up here. And obviously that kind of thing doesn't happen too often. But now, so that's the kind of thing I'd be looking for here and tomorrow. And it's kind of wobbling a bit now at the moment. I don't want that to be the case. I'd want it to push a little bit higher. But you could see what I would see on the 1 hour. Doesn't look so bad. It's not that bad. There might be something here. Could I put my stop loss here? Yes, that would be a nice tight stop loss, which allows me to get to my target sooner. Could I put my stop loss here? Yes, you could. Can you put it here? Yes, you can. All of those are valid stop losses, ladies and gentlemen. All of those are valid. They just, some are better than others. Okay, some are going to, the goal ideally as you trade as often as possible is to try to bring your stop loss as close as you can in order to try to achieve a desirable reward to risk. That's kind of what we're really looking for if we can. And so we want to achieve that as often as possible. But sometimes we do have to go with a wider stop loss. Sorry about that, just had to blow my nose. So yeah, and so I just want you to understand that all of those are valid because we're ultimately trying to place it behind those things. And so, yes, we are trying to put it there, but we also understand that there is some risk it might get hit. And of course, it's frustrating. You get tapped in and then the market goes on. That can happen. For the most part, and I mean that most of my trades, that won't happen, but it happens once in a week. So that's Eurocat. And most of the Euro pairs are looking like that. The one that's struggling a lot is Euro dollar. Excuse me, it's really struggling a bit. It won't be able to go through. So what we're going to do now is we're going to have a look at the GBP pairs the same way. Let's look at the GBP pairs. So we have these here. Okay, let's look at the same things. All right, let's look at the GBP pairs. So first of all, let's look at GBP Sterling. I would say this is weaker than Euro dollar. It's got a bearish engulfing candle here. It's pushing down. It's really hard. What's interesting, again, just to note about it, is an awareness of where it is price-wise. It's overextended to the downside. Again, I'm listening for the dogs, sorry. It's overextended to the downside. I'm actually quite surprised that it didn't bounce off this side, which shows how weak it is. It just pushed right through that. That's very unusual. In fact, to my knowledge, and I can't confirm this for sure, but to my knowledge, this is the weakest the pound has ever been against the US dollar. I have to find somewhere I've got more history, but I don't recall this. So that doesn't mean that by the end of the month there couldn't be a strong rejection candle like this or something like that. And if it does, you would get it. You'd be like, okay, I know why it's doing that. Let's have a look at the daily. So the daily is still bearish, downtrend in place. Nothing looks that there's no bullish divergence here. So this still looks weak. It is trying to slow down a little bit. You've got some bullish candles forming here, and you've got another series of bullish candles here. But this doesn't even count until I see a break above these highs and potentially up here. I'm not really seeing it. The pound looks weak. So let's go through all the GBP pairs and see what's going on. So look at pound Aussie. Also a bit of a consolidation, but overall looking more bearish. The euro's been climbing. So if you compare that, let's go to Euro Aussie, trending up. But pound Aussie is not. It also explains why when you look at Euro GBP, the euro is stronger than the pound. So you're seeing the euro climb against the pound. This takes practice. You just need to do it several times over and you start to get the gist of it. All you're doing in the beginning is just looking at a chart. So just bring it, look at it on the daily, just look to see if anything catches your attention. Which way is it generally going? Which way are the last 10 to 20 candles going? And if you can't tell, that's fine. Always go up to listen. If you also can't tell what's going on with the chart, big tip: go up. Just go up until you can tell what's going on. So pound Aussie, pound Kiwi. Okay, so pound Kiwi is trying to turn around. You can see it's found a level of support, it's trying to change that direction. On the weekly, it suddenly makes sense. It's a little bit. There's a major levels here. It's a little bit sort of range bound. On the monthly, it really makes sense. So here's what's interesting. We can see, loading up the data, we could see that it's the bottom of the range. My question to you is, what does the current candle look like? Notice that the double bottom there's a bit of a bounce off those little wicks. Does the current monthly candle look bullish or bearish? And is there a reason why it might be bullish? Could it be that it's off a support level and it's very range bound behavior? So is it possible that we could see it just ping-ponging back and forth between these levels? To me, that looks bullish. It's got a bit of a level to deal with here, and it's very range bound overall. So it's not ideal to trade, but it does kind of tell me why it's doing what it's doing. Okay, pound yen. So pound yen is ping-ponging all over the place. It's weak, and the yen is weak. The reason we can see a lot of the yen pairs climbing, oops, that was new. The reason we can see a lot of the yen pairs climbing is because they're weaker, or it's weaker than the currencies against it. So Aussie yen goes up, pound yen, euro yen, and so on. But currently, pound yen is not going anywhere. That's because the pound is weak and the yen is weak. Therefore, it's kind of staying where it is. Pound Swissy. Pound Swissy, very weak against the Swiss franc. So that's interesting. Now I want to show you, because we're actually scanning now. So I want to show you this stuff. Seems like Twizzler. Yeah, it absolutely does. Can I look at dollar index? Yes, I can. I'll take a moment for that. So we saw pound yen was going sideways. Pound Aussie was trying to turn around. It was trying to go up. Pound Kiwi is trying to go up. But pound Swissy is falling. So there's very different behavior. All of the euro pairs look like they're trying to turn around and go up. The pound pairs are doing different things. So interesting to me. I want to see what's going on with the Swissy pair. Why is this? If this one is so bearish, could it be the Swissy that is moving it? So let's start by looking at other Swissy pairs. Let's go to the Swissy. Let's see anything. Dollar Swissy. No, not really offering anything there. Not really offering anything. Let's see Euro Swissy. Euro Swissy, of all the euro pairs, is very weak. So I think it's the Swissy against the euro, the Swissy against the pound. Let's have a look at Aussie Swissy. Okay. Oops, wait for that to refresh. Okay. So that's also heading lower, so that's weak. Let's look at Kiwi Swissy. That's also weak. So I think it's pretty clear from this, excuse me, that the Swissy pairs are what's driving those moves lower. And remember how I said to you, you want to trade something weak against something strong. So pound Swissy is statistically safer to trade right now. It's a little bit overextended, I think, to the bottom. There's definitely some bullish divergence on the creeping on the MACD, but I want to see it on both. I'm not seeing it on both. So let's go to the 4 hour. 4 hours starting to diverge. That's starting to diverge, which to me again tells me that it is possibly starting to try to form a bottom. Okay. So I'm just a little bit more cautious on it, but overall, excuse me, it's looking pretty decent. Just overextended. Look at that, crazy. So overextended. you know, that we could go for another month or two, but I do think we are now in the sort of, hopefully at the end, where we're going to see a bit of a correction. Pound CAD. So by the way, so far, pound Swissy seems to me to be the one that's very, very weak and definitely worth putting on my watch list. Pound CAD is trying to turn around. Look at this. You can see here. It doesn't, you know, this could take weeks still, but it's producing these lower lows, but it's continuing to produce higher things here. It's starting to go, it's turning around here a little bit. It just means it'll probably go through a bit of a consolidation. So anyway, it's just a little bit overextended. Looking at it from a weekly perspective, what it's trying to do is to retrace up to here. And so how does that provide me with potential trading opportunities? Well, it looks like there might be a little bit of a level of resistance here. So if it is going to break its way up to there could be some day trading opportunities here. Does that make sense? So let me go through. What I'm going to do is use a box to highlight that area. So I'm going to highlight this area, meaning we break from there, we can get up to there potentially. So now I'm going to go down to the daily. Looks like a bit of a mess. These are just ideas. Doesn't mean it's going to unfold perfectly, but they are valid ways of looking at it. So yeah, there could be a breakout from here and we could see a nice move up to there. So again, you go down to that 1 hour. You can see we've got some potential moves up to there, and 15 minutes. Again, it's a mess right now, but if it did start to trend nicely, we could see some moves heading up a little bit higher. For some reason, it doesn't show on the 15-minute. There it is. And so we could see it, excuse me, starting to move a little bit higher. Okay, so that's something that could sit on my watch list. So you could kind of see how we're sort of looking towards those opportunities. Oh dear, somebody has heard somebody's outside. I'll try and keep her outdoors for now. Sorry guys. Because yeah, she's screaming to get in now, and she'll scream for 5 minutes. Anyway, so let's have a quick look at the dollar index, and then I'll come back to this. So we've got, where did I put it? Have I put it in here somewhere? So that's my DXY. I'm just trying to think, where did I put it? Okay, what am I missing? Sometimes obviously it's a futures thing, so it'll expire. Let's go see if we've got something here. DXY. There you go. Okay, so we're looking at the daily. It's obviously a new contract. You can see that dollar daily candle, very bullish here, also engulfing. So we've got a lot of that lately. We've got a lot of that lately. This dollar right now is just crazy. So we've got that bullish engulfing candle, which is very similar to what we see on the euro. So if we go to euro thing and have a look at that, you can see we've got a lot of that bearish engulfing candle. So it's an inverted thing, but yeah, it's got a bit of a range here. So, and again, we don't have enough data here, but DXY does look a little bit, it looks a bit range bound at the moment, excuse me, and it's near a level of resistance. So I'm very cautious on it. And the euro dollars, I do normally look at the dollar index, but I'm just watching these levels here because it's a bit crazy, and I would really stay away from this until it breaks through these levels or breaks up. But there's a battle going on, and we've got lots of news coming out this week, which just makes it even worse. Let's carry on with that. So let's have a look at the Aussie pairs quickly. Aussie pairs looking nice and bullish there on the daily. Look at that. Aussie yen is pulling back into this area. So we might be finding a little bit of a bullish setup here. And so this could be a potential setup. But again, it's too late in the day. I have my concerns. Entry above that, stop loss below the low. And then targeting 3 to 1 on that trade because it's a breakout and a retest. It's a potential. So what I would do for you guys is just watch. Let's just see where it is tomorrow, because I don't, the time of day for me, if it was early morning, because we have most of the moves in the morning, and then it can often overnight in the Asia session take a breather. So that's my concern. Aussie Swissy is pushing low, as we said. It's looking bearish. Aussie CAD is a bit of a mess. Let's see the weekly, what's going on there. So that is a bit of a mess as well. And this is a bit of a mess. So not really seeing anything with Aussie CAD at the moment that makes it very appealing. It's just stuck here. It's not like it's trending here or trending here. It's kind of stuck between that high and that low. It's acting weird. Currently looks slightly bullish. Looks like it wants to break up and go higher. Then we've got Gbp Yen. Kiwi yen has come right back through this level, so I think that's a bit of an alarm bell, broken right through that level, did not find support, tried and didn't. It appears as though it's coming back down here. So we could see there might be something happening. We might see some of these yen pairs are starting to fail a bit on the monthly there. It just gives you a bit of bigger picture. You kind of want to do it on the weekends when the market's closed, so you're very objective. Your best analysis, guys, in your first few years will be done on the weekends when the markets are closed. When you absolutely don't have that feeling of there's a trade somewhere you're supposed to be taking. Trust me on this. Just do it. Create a watch list and then update it as you go through the week. Kiwi Susi looks very nice and bearish, just overextended. And again, it's overextended when I start to see a bit of bullish divergence creeping in like you are here. So we've got fresh lows here, a bit of a bullish candle forming here, and we've got some bullish divergence. That usually tells me that the daily is running a bit out of steam. If you go down to the 1 hour, it's just doing a retracement, nothing else. Go down to, yeah, it's not doing much there. It's still quite a strong trend. Could actually produce a bearish candle here and carry on going. Kiwi CAD is trying to change around. This is an inverted head and shoulders or change in trend. It's gone from downtrend to uptrend. Look at that level it's trying to break through. It's trying to change trend. So that's interesting to me. Coming back up, it's trying to do that. What's happening on the daily? Yeah, it's not very happy. So when you look at that, it gives you a bit of sense of that. Like, so Kiwi CAD looks like it's excuse me, trying to sort of run out of steam there. If we compare that to Aussie CAD, they're not going anywhere. Remember, both of those looked a bit funny. CAD Swissy is bearish. Look at that, strong moves down, especially today. Let's look at CAD Yen is pulling back in here. So again, guys, there's something funny that's going on. A lot of these bullish candles formed, this buyer stepped in, and then the market doesn't follow through. Market seems to be kind of pulling in out. So maybe that yen is getting some strength. Swissy yen as well was definitely one of those ones where the Swiss was strengthening and the yen was weakening. So this is possibly the safest one to trade because the Swissy is very strong and the yen is very weak. Cool. So, okay. So let's go back through this. Let's look at the majors here. So the pound is looking relatively weak on the daily. The Aussie dollar is potentially trying to find a base here. So the reason I mention that is because we have a little bit of a level here, and then it broke through, and then it produced two bullish candles there as well. So a little bit of a double bottom on a lower time frame there. We've got some what appears to be sort of there's not enough strong signals here aren't strong enough, but it might very well be trying to turn around. Let's look on the weekly. No, it might break through. We'll see. So you kind of, in areas like this, it's tricky. You really want to wait for it to change trend before you become a buyer. You don't want to buy immediately because actually you can see here, although it did set up and hasn't followed through, it could still break this level and keep going. That was Aussie dollar. It's like a Kiwi dollar. Yeah, Kiwi dollar is quite weak at the moment against the US dollar, so that's pushing lower. So here I'd be looking probably here. Okay, so here you can see a little bit of a double bottom happening. Let's zoom in. We had a bounce and another bounce here, and this is because it's a bit overextended on the daily. So it's a bit overextended on the daily. 4 hourly is trying to turn around, do a retracement. So there might be a trading opportunity, if price pulls back into this area, possibly. Could come back as far as here, could come back as far into this area. But if it produces a nice bearish rejection candle here tomorrow, there could be some shorting opportunities, but that'll be a level of support, so I'd make sure I take some profit before that level. Hopefully that makes sense. So what I'm doing is I'm allowing the markets, the price action, to show me where the levels are. I'm allowing it to do, and I'm following the price action as it responds on those levels. Okay. Let's have a look at these other ones. We've got dollar CAD. So dollar CAD, whoosh, let's get rid of some of these objects, but that's quite bullish. Daily, look at that very strong bullish candle, broke to that level of resistance. Let's see what's going on here. Zoom out a bit. Yeah, it's coming up to this level there. Pushing through. It's got some stuff going on. That's dollar CAD. Dollar yen, as I said to you, I think is possibly struggling a little bit. It might keep going, but it's very overextended on the monthly. And this behavior is very odd. So it's struggling here. And then on the daily, it's basically got a level there and here. So it has, if we go to the weekly, we can see that was the top of the wicks. And then it had some problems here, the weekly candles there. So I would say if we break below here, we can see the market start to head lower. Otherwise, we could break out. So it could be consolidating ahead of a breakout. It can happen. We had that happen here. We've had it happen here. We've had it happen here when the market was already overextended. Excuse me. I thought it was going to come back, and it didn't. It just kept going. So I would rather really let the market prove me wrong, or prove itself. It has to know what it wants to do. 1 hour time frame, but on the lower time frame looks very weird action. So let's go down. So let's look at what we see here. So I'm going to just box that, and let's go down. 4 hour. Yeah, it's now got a range within a range, ladies and gentlemen. It's even more kind of messed up. So we know that it's range bound, top and bottom. We can see that, and it's got a little bit of a range down on the lower time frames. Does that make sense? So you can kind of know what's going on now. That it's just, there's the problem with ranges is that a lot of professional traders just get out of them. And so exactly, it could be a bit of an accumulation or distribution. It could be one of those phases where it's deciding what it wants to do next. But yeah, it is so it's dangerous for now because it's a little bit range bound. So not ideal. If there's other stuff to trade, I'd rather focus on the other stuff. And that was that dollar and dollar Swissy. Of course, dollar Swissy is a mess. Part of the reason that dollar Swissy is a mess is because, and you may not know this, but the SNB, the Swiss National Bank, intervened a couple of times in the past. And this is particularly obvious when we look at Euro Swissy. They threatened to intervene here, then they did, and then they were propping it up here, then they depegged, and they just keep breaking the Swissy. So what's happened is that over time, retail traders as well as investors are kind of staying away from it. And all it's done is continue to strengthen here. And that was the thing they were trying to stop. So all it's doing now is continuing to strengthen. And it has done that its entire life, because retail trading was only available in the 90s. And literally from the moment Euro Swissy has been in existence, it's been trending down. So it's still going down. It's still strengthening against the euro. And so that is, so the reason I mention that is that Swissy has become almost untradeable for people. Look at it. This is what it's been doing from 2011. First of all, their policies don't change. The Swiss are very slow to make changes. They're very much the same. They're still the same. And so therefore, the currency isn't going to do very much. It's not going to do a lot. They're not going to mess with it too much. But also they've also kind of broken it with the interventions, these little things here, and pushing it. They've done all this stuff here. So they've messed with it. So it's become undesirable as a trading instrument. Doesn't mean you might not see a short-term trade on it, but I just wanted to be aware of the bigger picture on, if you can't understand why it's not going anywhere, that is why it's not going anywhere. But so dollar Swissy, when you look at it on the daily, is just doing very weird swings. It's because it's not really being traded. It's just being, don't forget, there's a market underneath it. So there's actual tourists exchanging money, there's businesses paying suppliers, there's maybe wealthy people converting to Swiss francs or whatever. And so that activity is still taking place. That's normal kind of market activity, but there's no retail trading happening on top of this. Yes, I watched this chart, dollar Swissy, and wonder who trades that. Yeah, so you still get, there's always an underlying market, like pound Aussie. You've got all these people, Australians in the UK sending money back or getting money from their parents, and people, Brits, expats living in Australia. So there is like an underlying market of money moving back and forth. And businesses, they have branches and they're paying suppliers and you're ordering stuff. So we always forget that. We always think the market's moving purely because of traders, but it's not. Traders are generally a movement on top of other stuff. So yeah, my favorites right now. So again, I just wanted to talk about that. So euro dollar, euro looks relatively weak against the dollar. So the dollar is strong. The pound looks very weak against the dollar, but the pound is generally weak. We've gone through all the pound pairs. The Aussie and Kiwi pairs are also kind of giving mixed signals. The yen pairs are starting to like wobble a bit. They might be looking to take a sideways, like a retrace consolidation for a period. And so the stuff that I find the most interesting are the euro pairs for now, and some of those like Aussie Swissy or whatever, the Kiwi, was it the Kiwi Swissy or CAD ones we looked at that were looking pretty cool. Let's look at dollar Sing as well. Dollar Sing is generally very similar to the dollar. It's also quite strong. You can trade those. I mean, remember that most currency pairs have more liquidity than the biggest stocks in the world. So it's just spreads. Like if the spread is not great or you don't get it, then don't trade it. Yeah. So maybe for a longer term, sorry, it's an interesting thing. I usually say, so I'm going to quote myself here. I usually say that currencies are not the first choice for investments because it's always it's the supply and demand of the euro, for example, against the supply and demand of the US dollar. So it's more complicated than a normal instrument, like supply and demand of gold that's it. And so currencies for me over stocks or properties or commodities currencies would be the last one. There was a time when you had a carry trade, but that doesn't exist anymore now because the interest rates are not, you need like one interest rate to be like 12 and another to be 2, and then the big institutions will borrow one and lend against the other, and you'll get this steady. That's actually where the euro yen and euro Swissie longer term trades used to come from, but they don't exist anymore really because all the interest rates are really low. Maybe they'll start coming back. Maybe we'll start seeing moves now because they're upping the interest rates. Maybe we'll start seeing currencies start to move like we have with the Japanese yen. And also the reason dollar yen does something different to the US dollar. So if you look at dollar yen, it can often do very different things, whereas euro yen, pound yen, Aussie yen, all of those will be doing the same thing, and dollar yen will do its own thing. The reason for that actually is very simple. Japan has its own policies with the US, and so they focus a lot on what the interest rate is against the US dollar. In fact, that's the one they care about the most. They probably do more trade with the US than they do with everyone else combined. Okay. So again, those are my sort of favorite pairs. So in longer term timeframes as well can help you identify key levels, guys. So not so much on those pieces, but like, what were we looking at? So Euro Aussie, for example, you go to the monthly and you can get a sense of where these levels are. And so that tells you, okay, just so I know that's a monthly level or a daily level or weekly level. And then you can go down to these 4-hour ones. So a 4-hour chart that's doing that is I needed to break out of this range. So if it breaks down, then I can start looking for sells. If it breaks up, I can start looking for buys. We look at, say, Eurogbp. Generally, I'm looking for a nice trend to be up. This is a nice bullish candle, but there's a major level of resistance here. So we broke up, we came back and tested this. So the trend should still be up, but the only problem is this level of resistance here. So again, tomorrow, I will be bullish, but I want to get past this point first because it's clearly battling with that, if that makes sense. So I'm applying relatively kind of simple concepts to this. You're a CAD. Your CAD is trying to push through this now. It looks relatively bullish. And now we know why. We can see the CAD pairs have been moving like crazy. Yeah, pounds, we had pounds here looking quite bearish. So I want to wait for that to break. We need to see a break, and then I'll look for a continuation south, or if it comes back up, I need a break above that to go long. So it's in the ping-pong in between levels. Okay. Yes, exotic pairs often have the highest grades, but it's interesting because when I was trading 10, 11, 12 years ago, Danish krona, Swedish krona, dollar, Singapore dollar, they were standard. It's really odd, but they were standard then. And Aussie Kiwi was great to trade, and they just haven't been for the last, I'm going to say maybe last like 6 years. So now it tends to be all the ones that we have here. So what session do I usually trade? Ladies and gentlemen, I'm normally at my desk at about 6:30. I trade until about 9 o'clock. So let me show you why. Let me give you the logic behind it. So basically, if we are looking at, that makes no sense. Where's my market thing here? What's going on here? I'm looking for the market. So I usually have it in here. That's changed. Okay, so you could usually see the markets overlapping, which I'm not seeing here at the moment, and I don't know why that is. I usually get to see that. Oh, here we go. That's it. There we go. So I usually at my desk about 6, unless it's summer and I wake up earlier. So I like to, if I can, you can get some big moves in this part, in that part where the sessions overlap. And then it can sometimes go a little bit funny until about this time, and then it can rock until about here. So there can be some, so I try to get my trades in there, and then I'm usually done by 6 p.m. for day trading stuff. So there's usually a lot of movement in the markets during this period and that period there, and sometimes less so there. Yeah. So in other words, I'm trading when the market is providing those opportunities. Guys, thank you very much. Again, I hope that you found this instructive and useful, and it's always a pleasure, and I always appreciate your attending. And I was going to say to you, by the way, if you're looking for a copy of the recording, you can just email me because not everyone does, by the way, not everyone looks for a copy of that, but if you want, send me an email through to adam@tradewithprecision.com. And then, and of course, again, if you need any help at all with your platform or with your account, please don't hesitate to get in touch with the lovely folks at IC Markets. Obviously, they're very keen to assist you in any way they can. And yeah, thank you very much. I really appreciate it. I always enjoy it. So thank you very much. All right, ladies and gents, enjoy the rest of your evening. Thank you.